Today we're going to explore the consumer sentiment index and the stocks index and to see is there any correlations between them. We're going to visualize the trend individually in parallel. Also going to plot the scatter plot to see any um, apparent correlations between them. By the end of the um, video, we're going to do a simple clustering and to visualize again to see whether we can tell uh, anything between the sentiment index and the stocks prices in general. Is there any hints for our future stocks, a prediction or a selection? Let's get started with the code. Let's load the libraries, as we can see. The data for the consumer sentiment is downloaded from University of Michigan. Here is the website. I already downloaded the CSV files. This is a general overall sentiment index here. Let's load the data frame. We're only going to choose the first three columns, and we're going to reformat the year and months. Since here the put the months and the year in two different columns, so we need a little bit of effort to reorganize the data set. We are going also to add two rows of data. Since this is not released in a website, we're going to manually input here just to show the July and the August the index for the sentiment. So we're going to create another new data, two rows, and add into the data frame. And we're going to briefly plot it just for visualization. As we can see, the data is actually from, let's check, 2008 until the August 2022. These last two rows were added as a temporary, or the data hasn't been verified or calibrated. We also going to download the stocks data. We are going to use the SPY, the ETF, as a kind of a symbol to represent the overall stocks market. We are also going to download the data from 2008. We are going to reorganize the data a little bit and to create the data frames, and we're going to rename and change the columns, properties, and let's take a look quick here. We are already have a kind of reorganized the data set. We're also going to plot it for visualization. As we can see, here is a little bit crowded. We can zoom in a little bit and to see here is a fairly like information, a very crowded information here. That's the 2020 and the significant plummeting. That's the August. We haven't finished, but this is the July data. Let's close this. We're going to reorganize it and to form another data set. We're only going to pick the median from each month, the stock's price. We're going to plot it quickly here. As we can see, this is the sentiment index. Here, this one is the SPY stocks price, ETF price. As we can see, it reaches the the highest point at the end of the 2021. Then it started slowing down. We can get back to the regular plot window. We can have a very quick plot between them. As we can see, um, the dense area at the right um, bottom, it looks like there is a fairly a strong correlation. However, on the upper side and the left the side, there is uh, kind of the leverage is not very favor the linear correlation. Let's just show what's the correlation. It's fairly weak, but not negligible. Let's just say what we can tell from the further analysis. Let's do a little bit clustering. Let's reorganize the data and a little bit and rename it. In the hierarchical clustering, we needed to calculate the distance first, then feed the data set. We can plot it quickly here. And also, this is a fairly crowded data diagram. As we can see from the top, there are two apparent groups. We can also 1, 2, 3. There are also it could be three groups, as we can see. If we go lower and lower, there are more groups, but maybe not very, the purity maybe not very high. Let's close this. We're going to choose $300 as a cutoff point, and to have only the two groups, since we can see from this scatter plot, looks like this this zone of the um, area is one, or this could be one cluster. And as we can see, 1, 2, 3, there might be three clusters. In order to simplify this, let's just pick these two clusters. Let's do the cutoff differentiations. Let's quickly check the data, the values. As we can see, there is one. This is a cluster, and we can also, let's just say, reformat the clusters. Here we use the column bind and to combine the clusters information into the sentiment and the stocks price information. We already combined them, and we also change the cluster into the factor. So we can check this by zoom in from here. As we can see, the cluster, we already have it here. It has two levels. As we can see, there's a 1, 2. And let's quickly go back and plot it again to take a look. Here we use the clusters as a kind of a difference uh, to to color them and to see. Here we are, and we have this on the top, as we previously mentioned. There's one cluster, although not exactly here. This part, that's a cluster one. This is a cluster two. So we can also plot it in two parallel, uh, and then color them by two different clusters. Let's run it again. One, two, and this plot one and plot two. We can start as a object, and then we can use the grid arrange from a grid extra library to arranging them in a way you think maybe more meaningful. Let's take a quick look. As we can see here, that's the stock's price. This is a sentiment. What we can see here? Well, before the 2020, before the COVID 19, actually the trend, the stocks price, as well as the consumer sentiment, and they are fairly aligned, as we can see. However, after the COVID 19 started, uh, the stock's performance and then the sentiment index diverge. That's what you can see. The reason behind it is there could be many reasons. However, the main reason could be because of the more money injected from the government into the market and disregarded the sentiment, consumer sentiment. The stocks were climbing into it was not sustainable, and the Fed roomed in and increased the rates. So that's the diverge uh, of the stocks price in general and the consumer index. Here, I maybe give you more hints, and hopefully, it can give you more kind of tools and information when you choose your stocks and optimize your portfolio. Thank you.